Hello and welcome to Markets Daily. I'm Zohaib Fazil, and over the next few minutes, we're going to talk about how the market performed in today's session and what are the expectations from tomorrow's session. Today, a lot of people who would have sold straddles would have made good amount of money because if you look at Nifty, it was just within a 75 to 80 point range, volatile but still within that range, and anyone who would have sold a straddle in the morning would have made good amount of money. Yesterday we discussed about Bank Nifty being at a very strong support level of 50-day moving average, and today again it, uh, it touched the 50-day moving average and then from there recovered, which means that it respected the 50-day moving average, which is quite positive. All in all, today's session was a very choppy session in terms of price action, considering that Nifty was quite range bound, and within this range bound market, I mean, it was volatile, considering that we have been seeing a volatile nature of the markets for a long time. From the institutional data perspective, FIIs have sold shares worth about 400 crores in the market, and DIIs have bought shares worth about 250 crores in the market, taking the net institutional sell figure at 150 crores. With today's selling, it is the third consecutive day that FII have sold in the cash market. However, from a monthly perspective, the FIIs are still on the buy side. They have bought about 700 crores worth of shares, whereas the DIIs have bought for about 6,200 crores worth of shares so far in the month of June. From events perspective, there are no important events this week that would be guiding the market. However, from the options data perspective, again, it's not giving a very conclusive evidence of how the market is going to behave, which implies that most of the market participants are expecting markets to be quite range bound. And most probably the range for this week is going to be from 18,350 or 18,400 on the lower side and 18,800 on the upper side. In yesterday's strategy session, we discussed about taking 18,600 short straddle for the month of July and holding it for about a week to a couple of weeks, to make about 1 to 1.5% return on capital deployed. And that strategy, if you would have invested in the morning at about 9:20, would have yielded you a return of about 0.6% on the capital that you would have deployed, which is quite good considering that it's a good return from a daily perspective. We, from a stop loss perspective, had said that if Nifty starts moving above 18,750, then you should be coming out of that trade, or if it starts going or breaking 18,400 or 18,350 on the downside, then again you should be coming out of that trade with a small profit or loss, whatever the case might be. But looking at today's price action, I would request everyone to stay invested in this strategy till 18,800 is not decisively broken, because the market will be expected to be volatile over the next couple of days, and it might go and touch about 18,800, but then from there we are not expecting 18,800 to 18,850 to be broken on the upper side.